Welcome back to Money Life, where it's time for the big interview on this show. And I'm joined right now by Bruce Kahn. He is lead portfolio manager at the Shelton Sustainable Equity Fund. It's ticker symbol NEXTX. And if you are looking for more information on the firm, well, that would be sheltoncap.com. If you're looking for more information on the funds, it would be sheltonfunds.com. Bruce Kahn, thanks so much for joining me on Money Life.
My pleasure, Chuck. Nice to be with you.
There is a lot of places to go to when it comes to sustainable equity. And I don't want to do a thumbsucker interview because my audience has heard from plenty of ESG managers and they understand how ESG works. But I do want to hear from an ESG manager about how ESG is changing and also how the perceptions of it are changing. So let's start with your definition of sustainable and how it gets practiced in the fund, because when we used to say ESG or we used to say sustainable, it was all about screening. You would just kind of go, okay, we'll run a screen and then we'll decide what we can invest in. And then everything about valuations or whatever, it's just our growth value, whatever metric we like. But now you've got funds that have advocacy. You've got funds that don't have advocacy. You've got all kinds of different positionings. So if it's not just about screening, what's it about?
It's about value. All the adjectives are about investing, and with the noun investing. We are about discovering value and investing behind great companies that are leading, transformation of our economy. And that has been an ongoing process since investing began. When you put an adjective in front of it, such as sustainable investing, what you're pointing to is, well, we think of sustainability as an aspirational state, a state of the economy, of the state of the society, where there's going to be social and environmental quality and, reducing poverty, reducing pollution, having more healthy food, breathable air, abundant food for everybody. That's a sustainable state. And that's what we aspire to invest in. And it's not just us as investors, it's corporations are investing an enormous amount of their own capital expenditures, CapEx, into improving their businesses along those lines. And I want to distinguish sustainability as a state. It's a state of being. It's a state or condition of our economy and society, where ESG is a framework. ESG is a framework of analysis to determine how companies are performing on various issues, whether it be environmental, social issues, or governance issues, right? And they're not the same thing. One is a state and one is a framework that has data. So when people confound this, they have to think about, what does it mean when I say sustainable investing? It means I'm investing towards the future of a future state of the economy, and I'm using ESG data to help me understand how companies are performing. That's the distinction I make.
So, and I know in my audience, I have folks on both sides. So how would you distinguish being sustainable from what someone else might say is being woke and somehow putting the negative on woke?
Well, over the past, I think it's 2 years now, let's call it 18 months, 2 years, there's been some political theater really around this topic, and it's nonsensical. So it just doesn't mean anything. What does mean something is the CHIPS Act, the bipartisan infrastructure bill, and the Inflation Reduction Act is putting, by some estimates, $1 trillion to $2 trillion of tailwind to our economy that's going to transform the American economy. That's real, that's happening, and there's companies who are operating on that economic premise. If you want to say having more renewable energy is woke, that's fine. Having more renewable energy is part of our future. And, whether we have more renewable energy or more fossil fuel energy, regardless, we are going to be short energy because of the increasing demand on the part of what's really in vogue today, AI and the building out of data centers. Most of these data centers don't have the power that's requisite to do all the great AI things they want to do. So if we don't invest in the power sector, there is no AI and data centers. So and we're going to be short energy.
Well, let's take it to a different type of energy and a question that has political views, but also that is changing that I don't know that the public mindset is changing. And that would be the auto industry, because the auto industry clearly moving towards electric vehicles. There was legislation that has helped that dramatically. And former President Trump has said that if he is elected, he will basically roll that back. And he's saying it would be good for the auto companies, which I'm not in a position to say one way or the other than if you look at the numbers of the industry, where they were 10 years ago, 8 years ago, with regard to how much EV made a portion of their sales is very different than where they are today. And so when we look at sustainable and we're looking at, hey, can they do this? For you as an investor, is it less about the power source than it is about, hey, autos are going to be made. And oh, by the way, look at the companies today and what they have moved towards. And you need to be going to sustainable because that's the business model they're going to have. Like, that's one of those cases where I look and could go, is that Washington? And mind you, it could have been the other way when they were going to EV, kind of messing up the industry or making it that there's a change.
Well, I think the key driver of moving mobility to be more electrified is predicated on the consumer. The consumer wants that product. So the OEMs have fallen all over themselves to, reconfigure their businesses. And that's a continuing trend. And that's not a new trend, by the way. That's been going on for the past 30 years. It's a 30-year overnight success, right? This has been going on for a very, very long time. In fact, I was involved in a couple auto companies, back in 2002. That's 20 years ago now. Yeah, 22 years ago. So this has been going on a long time, and the consumers are demanding it. But I think there is some, awareness of how restrictive that our infrastructure is going to be on that growth, because we don't actually have all the proper infrastructure for the electric cars that are being demanded. So again, it comes back to what are the core infrastructure needs of a growing industry that's innovating? So just like I said, on data centers and AI, we need more power. Just like for electric mobility, we need more infrastructure for that. We don't have all the charging infrastructure, all the battery infrastructure yet. So, but that's why growth and innovation is constantly moving, because we're trying to get that infrastructure in place, and that is in part the stimulus that's coming from the Inflation Reduction Act to kind of build out some of that electric mobility infrastructure.
Ultimately, the thought behind sustainable investing is that basically you are looking for the industries that will be leading in the future, and that by nature that has to be something sustainable. Like, when did that become an idea that somehow was different thinking? Because isn't that what we were always doing? We just didn't call it sustainable, and maybe we didn't focus on let's make sure we have the right governance and the right social stuff.
Well, no. Sustainability, as was co-opted by the investment community, was predicated on a report back in the 90s referred to as the Brundtland Report, which was the idea that sustainable development is, providing for this generation its needs and without compromising the ability of future generations to provide for themselves. And over the past, 30 years now, 30, 40 years, there's become more and more science, more and more recognition, and more awareness by the public that, yeah, indeed, there are environmental limitations. There are more and more health issues that come from the environment. There are more social disparities that come from an unequal playing field economically. And, we've always known there are problems around society and organizations and how well they're managed. So just having more and more information and better research in this area has made us much more aware that there are limits to our planet's resources, and we need to take that into account as we consider, the future of an individual company and the future of an industry. And that is much more pointed today than it was, say, 30 years ago. Much more awareness of that today.
I should point out for my audience, because we don't spend a lot of time doing full-on introductions, And so my guest is Bruce Kahn, lead portfolio manager, Shelton Sustainable Equity Fund. Bruce is a PhD, and that your studies, going back to your days of getting your bachelor's degree, were in ecology and evolutionary biology, and that you do a lot with agriculture, which I think when people are thinking sustainable industries, they're thinking about the discussions we've been having about the automotive industry, et cetera. But I'm curious, given your background and the fact that you've done a lot of traveling around the world to look at some of this stuff, what are the sustainable technologies that you find most exciting and the sustainable industries that you think are the big opportunities going forward that are not necessarily the things that everybody else thinks of when they go, oh, ESG, that's what this means?
Well, thanks for pointing that out, Chuck. So there are no such things as, in my mind, of sustainable technologies or sustainable companies. Sustainability is a state that we want, that we're aspiring the world to be in, a sustainable state that is stable and that will be good for our own public health as well as for the environment. Companies have technologies and innovations that will lead us to that state. So I don't think of companies as being, this company is an ESG company, that company isn't, or this company is sustainable, that company isn't. I think of how well the companies do two things. The first thing is, what is it they produce? So solar panels, most people think of sustainability or ESG, they automatically go to renewable energy, solar panels and windmills. While, yes, there is that, but there are other products in the world that are really important. For example, going back to agriculture, the ability to convert dairy manure into electricity is an important technology that is being rolled out by a lot of utilities to capture a lot of waste from agriculture to turn that into electricity. That's being deployed across the energy sector as well, because a lot of energy sector byproducts are products that go into making fertilizers. And those technologies can be used to now store energy in the form of hydrogen. And that's a really important cross-cutting set of technologies that work across industries. Now, that is the what of technology, right? Then there's the companies, how they do something. A company that, pollutes itself out of business, and agriculture is a great example, where, an agricultural producer can end up using too much chemicals and basically reduce their production because they've over-fertilized or overuse of pesticide. So the problem wasn't the technology, the problem is how it was deployed. So when we look at how companies are operating, we look at what they do and then how they do it to determine whether they're on the path towards what we envision as a sustainable world where you're not basically polluting yourself out of business. And agriculture is a great example of that. So I mentioned fertilizers, and now we have a lot of non-fossil fuel-based fertilizers, biochemistry, biopesticides and biofertilizers are the new innovations of agriculture. And there's nothing more important than food and water in the face of climate change, nothing more on the front lines of climate change than food and water. And that plays into a lot of the geopolitics that goes on as well. Oftentimes, food can be used as a weapon, and we want to make sure that there's abundant food produced in an environmentally sustainable manner.
Given the political climate, how worried are you that things that you find as sustainable technologies and the rest are being hindered rather than helped for political rather than scientific reasons?
I tend to think a little bit more long-term than what I think of as, the 2, 4, or 6-year rotations we have in the U.S. government. So I think that what I'm paying most attention to is how are companies responding to various opportunity sets. And if that comes with tax credit from the government that is more certain and more transparent than it's ever been, that's a positive sign. I don't think that the political mood that swings back and forth is really going to change that much. I think what companies like is they like, okay, here's a tax, here's a subsidy, here's a regulation. I know it's going to be true for the next 5 to 10 years, so I can, manage my business against that. There's nothing more encouraging as an investor than a stable, business plan that's not going to vary a lot. And I don't think that the current Inflation Reduction Act, CHIPS Act, and infrastructure bill will be swayed by any change in government coming this fall.
Almost out of time here, but now we're going to prove that sustainable money managers are money managers like everybody else. In that, what's your outlook for the market at this point as we head into the home stretch for the year, now towards the second half?
Yeah, the market within the sustainable field, I think, is a little bit impatient, but waiting for the election cycle to go through. But either way, I think it's going to be very positive for sustainable investing. We've seen some good tailwinds over the past 3 months, and I think that's going to continue throughout the year. I would expect a little more volatility come the fall, but I think it's going to be a banner year for sustainable investing in either outcome of politically.
But by banner year, do you mean that you believe sustainable investing will perform better than the rest? Because that's, we've got a market that I got small cap managers tell me small cap's about to take off, but they've been telling me that for a couple of years and it hasn't happened, et cetera. So if your forecast is sustainable, how much of a difference will sustainable deliver?
Sustainable investing is, at least in the way we look at it, is really a 3 to 5 year kind of look. So short term, you asked me about the rest of the year. That's what I think it's going to about the rest of the year. But we're not investing for November 6th. We're investing for November of 2028. But I think that regardless of the political outcome, sustainable investing will continue to outperform because really based on the capex that companies are putting to work. And it's going to be the second half of this year where you're going to really start to see the fruits of the CHIPS Act and the infrastructure bill and the Inflation Reduction Act, independent of the politics. So that's why I think that's still the case.
Bruce, great stuff. Thank you so much for joining me on the show to talk about it.
Thank you, Chuck.
That's Bruce Kahn, Dr. Bruce Kahn. He is a PhD. He is the lead portfolio manager for the Shelton Sustainable Equity Fund. His ticker symbol, NEXTX. And if you're looking for more information, sheltonfunds.com. If you want to learn about the firm, it is sheltoncap.com. And we will be back to put a bow on today's edition of Money Life right after this message. So stick around, make sure you're up to date on our contests and the rest, and then cross the finish line with me right after this message.